My name is Chris Satchell. I get to build, buy, and sell simple profit businesses every single day. And today we're going to be talking about profit-led financials. Those of you who follow our content, you know that we run a newsletter. Every single week, we pull 50,000 or so business owners through Simple Profits. And we ask things that matter to you so that we can then create this content as well as templates and other digital products for you to implement in your business. This past week, we asked, do you run your business with profit-led financials? And overwhelming majority was, I don't even know what that is, but if I did, I would like to, right? So in today's video, we're going to cover what profit-led financials are. And if you stick with us to the very, very end, you're actually going to be able to get access to a playbook that we put together, a profit-led financial playbook, which gives you background information, everything that you need to know in terms of what, truly a teacher and equipped, what profit-led financials are, how you can change your perspective in terms of implementing and approaching profit-led financials in your business, and then ultimately a little worksheet so that you can actually do it yourself, right? And we put all these templates available in our shop over at shop.bootstrapper.capital. And if you're watching this video, you could use promo code Bootstrapper, and you can get $300 for free to get access to any of the digital products, any of the templates that we've already put together inside of our e-store. That being said, let's get down into it so that we can actually start to deliver some value. And let's go into background first. Everything starts somewhere. So where we should probably start with is, what is profit-led financials? Why are they important? And who is it important to? So from a what perspective, profit-led financials, it's all about prioritizing profit in the operations of the business, right? So we are in business for a reason. Hopefully it's purpose-driven. And hopefully we're doing what we enjoy to create value for others, which are our customers. And in that process, though, there's a profit pursuit, right? So there should be a profit motive in operating your business. And profit is a good thing, right? It's an indicator that you're doing the right things at the right time for the right reasons, producing the right outcome. And because of that, you're able to generate a profit. And the goal is to generate a consistent profit over a very long period of time from the operations of our business, right? So the goal here with the why is to change our perspective. A lot of businesses are taught like traditional finance, and traditional finance is revenue minus expenses equals your operational expenditure, your budget, right, to run your business. What we want to do is change the traditional perspective. And we want to focus on maintaining the continuity and the sustainability of business, because the goal of being in business is to stay in business. Whoever can stay in business the longest typically wins, as long as you're providing an elite level of service and creating value for your customers, right? So this is all about focusing on business continuity, right? So you're taking a profit-led approach to running your business, putting more profit in your pocket by building a better business. And ultimately, this is for anybody who's in business, right? This isn't just for small business owners who need to run profit-led, right? The 30 million of us out there, we have to run profit-led because we have things like payroll, right? We have responsibilities that is life. Life is a real thing. And we don't really have access to billions and billions and billions of venture backing to run at a loss, right? So we have to run profitably so that we can run sustainably. However, reality is, if you're in business, this is a good fundamental approach, right? Again, it's not a bad thing to build a profitable business, right? So this is for realistically anybody who's a stakeholder or involved with any business anywhere at any time. And from a basics perspective, just like getting back to business, back to basics, right? Business is all about selling a solution at a market price, right? So we need to know the market, supply, demand, meets an equilibrium, price is just what somebody else is willing to pay. The market, kind of tells us what that is. So our job is to understand the market, know what people are willing to pay based off value, and then sell it. And then in order to generate a profit, we need to deliver what we sold so that people are happy, right? They bought something, they need to receive it. We need to deliver it at a lower cost than the price we charged. And by doing those two things, we generate a profit. And the job to be done is to collect all of that profit and then distribute it to the right places, the right stakeholders. And sometimes we forget all of the stakeholders that are involved in our business, right? Reality is the biggest stakeholder, and the one that you definitely need to pay, is the government, right? So start there. You got to pay your taxes, right? We got our employees, we got to cover payroll, right? Folks are doing great, people make great companies. So we got to make sure people are being paid for the work that they're doing. And then we have all of these supplies, things that go into producing what it is that we sell, or, solutions we provide. So we got to pay our vendors. Then maybe we have debts, right? Maybe we took out, a note from the bank, SBA, friends and family, whatever the case may be. So we got to pay our debts. And then ultimately at the end of the day, owners or stakeholders, we're taking on this risk, this responsibility of being in business. It's really a privilege, and privilege is really responsibility. So ultimately we need to be able to get compensated for that. And that's where profit disbursements come from. So this is extremely important at the end of the day. If you're taking on the liability of being in business, you really want to be able to prioritize putting profit in your pocket. And there is a way to reverse engineering putting profit in your pocket. And every business owner should care about that. A lot of it just comes down to the math, right? Measure what matters, know the math, right? Let the math, let it make sense. Let it make sense for you and flow it through, right? So there's a couple of things that we need to know about. We need to know what gross profit is. We need to know what our gross profit margins are, right? That's what we want to pay attention to over time as we're optimizing our business. And then we want to know where the profit allocations are going, right? What compartments. I'm going to get into this in pretty great detail in a little bit, because again, we're going to actually take you through the 7 steps of setting up your business for profit-led financials. And then if you want that playbook, you can get access to it and do it yourself, or you can get in contact with our team and we can help you do it, do it with you. From a rules perspective, we want to keep it simple, right? So again, the goal of business is to stay in business for as long as you possibly can. Typically, whoever is playing the game the longest wins. And business is just a game, just like, other things. And, the goal is to just stay, you want to keep playing. So what that ultimately means is you don't want to go out of business, right? Which means you never want to start over, because the moment in time where there's no longer money in your account because you're not running your financials appropriately and you're not being diligent and accountable as an owner, right? And you're maybe not managing appropriately, you're not running profit-led, there's a good chance that you could end up running out of money. And if that's the situation, you're out of business, the game starts over and you have to start over. So the goal is to never start over. And this is a simple approach to be able to do that. So you never have to start. Why? You can't necessarily control outcomes, right? You can never promise outcomes. You can never guarantee outcomes. But what you can as an owner is you can control the process. You can guarantee process. And if you're diligent enough, and if you're intentional enough, and you care enough about your business, you will take the time to break everything down and reverse engineer what goes into the outcomes. And by knowing what goes into the outcomes, you can keep accountable to make sure everybody's following the process, including yourself, right? You can control process. You can't guarantee outcomes, but you can control process. And in the process, you could, of that, you could put more profit in your pocket, right? So by controlling process, you can land with more profit in your pocket as long as you stick accountable. What does that look like? So all of these things sound really good, but what does it actually mean? Like, what's the functional, like, where's rubber meets road? This is a visual breakdown, because some of us are just, it's easier to be a visual learner. Some of us, ultimately learn by doing. That's also why we have these playbooks. So you could just take this information and go do it, learn it, right? Visually speaking though, we have our gross profit. Again, our gross profit is coming from, the math, what the math. We want to know our revenue, and we want to know our cost of goods sold. You take your revenue and you subtract out your cost of goods sold, and you land with your gross profit. And the gross profit is the thing that's going to flow through your business. So that's what this chart is showing. It's showing the gross profit flowing through your business. And that's what we're setting up. We're setting up these different accounts, and we're setting up a process to allow the money, the gross profit, to flow through your business in a sustainable manner. That's what we're going to talk through today. That's what this Teach, Train, Equipped is all about. So hopefully at the end of the day, you're running your business profit-led, and you're going to be able to stay in business for as long as you possibly want, because you're in control of your money. right? And you'll be able to make those good timely decisions to make sure that happens. I'm going to go through the 7 steps that you can follow to put more profit in your pocket. Now, again, this is not this is a fairly one size fits all approach. So every business is unique. Your business may be slightly different, right? It's bespoke to you. What we tried to do is follow like law of large numbers and this general approach. Just make a good timely decision. Assess it and determine, this is relevant to you or it's not, and then make the changes appropriately, right? So the first step is you want to know your numbers. And when I say know your numbers, it's the numbers mostly from this formula, earlier. End of the day, by paying attention to your gross profit margin, you're going to be able to make good timely decisions and pull appropriate levers. In order to increase your gross profit margin, you're either increasing your price, right? Or you're decreasing your cost of goods sold. Like those are 2 levers that you can play with to be able to improve your gross profit margin. And the name of the game, the job to be done, is to optimize your gross profit margin. You want to be able to extract the maximum gross profit margin you can from the market. And again, the better you know the market, the better you can price, right? And then there's different functional factors that go into your ability to demand a better price in market, which is building a better business. And then you want to operationally run a better business, and you want to maintain and manage and control your costs, cost of goods sold, right? By knowing those 2 things and paying attention to them, you can ultimately know your numbers and you can make better timely decisions, which then allow you to set targets. And those targets are going to be like, how much profit do you want to put in your pocket, right? You're going to ultimately create buckets, allocation buckets, and you're going to break them down and you're going to put budgets into them. In this situation, we have, let's see, 1, 2, 3, 4, 5, 6, and a bonus number 7 buckets. And again, this is kind of a law of large numbers approach, right? But it could be, unique to you. So feel free to change. What we're going to take through is like the fundamentals of how this functions and how this flows. But each one of these boxes here is a bucket, and I'm going to go through each one of them, right? So we're going to create our allocation buckets. That's where we're going to allocate the profit, the gross profit margin to, and then we're going to set up the accounts. So these are actually going to be accounts, like a checking or a savings account, like a banking account, where money can actually flow into and be captured, right? So when we say step number 2, set up your accounts, we quite literally mean set up your accounts. And again, the image, picture this like you're at the wedding, and you have all of those glasses set up in the middle, and maybe it's champagne, maybe it's like a chocolate fountain or whatever it is, but it's coming through the top and it's flowing on down. And once one glass or a bucket is filled, it's flowing to the next and flowing to the next. And it's quite literally waterfalling your profit, your gross profit, right? So you want to set up the accounts that are going to flow through, let the profit flow through in your business. In our situation, we set up these 7 accounts. We set up our operating account, which the operating account is going to be used to run your business on a day-to-day basis. This is like your monthly operating expenses, fixed and variable. This is what you're using to pay all your bills and cover everything that's outstanding, right? And you want to make sure it's always full because again, the goal of business is to stay in business, right? And we never want you to have to start over. The number 1 cheat sheet to make sure you never have to start over is to make sure your operating account is always full, right? However, when we're setting up the operating account, there's the reality that, there's other things where money needs to go. But we have our operating account, we have our tax account, which is what goes to the government, right? And you always have to pay your taxes. Then we have our rainy day fund account. This is going to be the fund. This is going to be the account for everything else. This is going to be the account for things that you can't plan because life is a real thing, right? And we're going to go through why and what, but we want you to have at least 3 months of your operating expenditures, your fixed known costs in this rainy day fund. Then you're going to have a war chest, which your war chest is going to be for strategic decisions, right? So that's going to be for things like going and acquiring other businesses, right? Or maybe running, opening up a new business unit or introducing a new product to market. Then you're going to have your operator account, because again, there's 5 exits of ownership. We want to master all 5 exits of ownership. And the first real exit is exit number 4, where we're placing an operator to run the day-to-day of our business, to make good, timely decisions, to be able to do all of these things so that there is profit left over that goes into a disbursement account, which goes to ownership, right? So we want to make sure there's an account set up for other people to run the business. And then we want to make sure there's an account set up for ourselves as owners of the business, where we're going to disperse profits into our pocket. And once we reach our targets, because some of us only have, fixed targets of what we want to achieve in terms of profit disbursement from our companies, the assets we own, there may be this 7th little discretionary account. And this could be for things that are this is like maybe for, buying the team some tickets to the ball game or something like that, right? Like things that otherwise don't end up on a piece of paper or a strategic plan sometimes, or a line item on a budget, but are nice to haves. They're not need to haves, but they're nice to haves. And if the money is there within a profit-led approach, then you can do it. And that's the discipline we want to put in place, is then you can do it, right? So that's step 2, is you want to set up these accounts. And again, your accounts may be slightly different based off of your targets, your focus, and what's important to you at this current stage or exit of your business. Step number 3 is we want to measure what matters. And when we're talking about measuring what matters, this comes back to another video, another exercise, a whole nother function where we process and profit map, right? So our profit engine is how we generate revenue in our business. Our process engine is how we support that revenue in our business. And all of it is our equity management system, or our simple business system. We want to be able to measure what matters by setting targets, right? Which each part of the process of your profit engine, your process engine, so that we're supporting the right things, the right components. Because again, you can control process. You can't guarantee outcomes, but you can control process. And we want to set targets tied to that, so we know whether things are trending in the right direction or the wrong direction, right? And then that way we can be proactive in identifying shortfalls on targets associated with process, right? Because either things are happening or they're not. Just like a circuit in your house. Like if I'm flipping the switch and the light's not going on, there's a reason why. The circuit's broken. Something's not happening. Something's not working that otherwise should, right? By mapping it out, we can understand what the circuit looks like. And then we can start to get analytical in terms of why. We can explore why, and we can fix it, right? You need to know what it is first in order to fix it, right? Because then we want to tie our targets back to our forecasts and our budgets. Because know our numbers, we're setting what our forecasts are, how much revenue we want to drive, right? What our gross margins are, right? And then what our budgets are that we're operating within. And we want to make sure that we're staying on track and on trend. So as we're setting up our measure what matters, we're always sticking due north. We're following our North Star. Now, here's where the fun starts. This is where the rubber meets the road in terms of profit-led financials. This is where the actual profit flows through. So again, think of it like the tower, the chocolate fondue tower, flowing and overflowing chocolate all the way to the bottom. You're going to let your profit flow through your business. And there's a functional approach to being able to do this. What we want you to do is know your gross profit. So your gross profit's what's going to start to flow up here. And right away, you're going to take 30% of your gross profit and you're going to put it into your tax account. Now, 30% may be the right number. It may be the wrong number. We definitely recommend that you speak with your CPA, right? Your financial expert, professional expert, to be able to understand what it is for you in your business, right? However, what we've observed, law of large numbers, is 30% is genuinely pretty safe, right? So that's what we recommend. That's what we suggest, to make sure that 30% of every dollar from gross profit flows into the tax account. So when it comes time to pay, Uncle Sam, the IRS, the money's there. And this is one of the real reasons or places where we see a lot of people see and experience risk early and often in their business. This is one of the things that stops people from being able to play this game, right? Not being able to pay their tax bills when taxes come around. So just, plan appropriately. Let the profit flow right away to meet that obligation, because that's what that is. That's an obligation that you need to meet. Then you're left with 70% of your gross profit. And again, your gross profit is your revenue minus your cost of goods sold is your gross profit. So you either want to decrease your cost of goods sold or increase your pricing, grow your revenue to be able to increase these numbers so that you can hit your targets associated with each of these accounts that you set up previously, right? But right now, what you're working with is 70% of your gross profit. And that's going to go into your operating account. And you're going to let all of that money flow through until that first bucket is full. And you want to fill up that first bucket with 1 month of your operating expenses. That's fixed and variable, right? And then do a little bit of a buffer. I would suggest doing a little bit of a buffer. So I would say whatever your budget is for your monthly operating expenses, maybe do 1.5 times. Some people will do maybe 1.2 times. But I would do a little bit of a buffer and set that target for your operating account. And again, because you know your numbers, because you've already done this, you've already set these targets, all of these are already in place by the time that you're letting the money flow through, right? You did this at step number 1. So at step number 4, it's just a matter of executing on file process, right? So you're going to fill up that operating account. Then 100% of the money from overflow is going to flow into your rainy day fund. And you're going to let 100% of it flow through to your rainy day fund until you fill your rainy day fund. And again, your rainy day fund, our suggestion is 3 months of your operating account. So you're going to take your operating account, you're going to meet that obligation, then you're going to multiply it by 3 and you're going to meet that obligation at your rainy day fund. Now here is where, math, the money actually starts to get fun. This is your fun money to a certain extent, because now you're sustainable. Once you've paid your taxes, your operating account is flush and funded. Your rainy day account is funded. Now you're in a sustainable position. You're definitely going to stay in business this month. If something happens, because things tend to happen in business, right? Life is a real thing. You can weather that storm with your rainy day fund, and you're going to meet your obligations with taxes. So at this point, you're sustainable. Now you want to get profitable, right? And this is where things get fun. The first allocation is going to be a 33, 33, 33 split. So 33%, 100% realistically, of the remaining overflow from the rainy day fund is going to get split 33% into your war chest, your operator account, and your disbursement account. You're going to do this evenly until your war chest is full. So once you've met your war chest targets, that's when you stop letting the money flow into your war chest and you start to split it 50-50. Now you're splitting it 50-50, right? So 33, 33, 33. Now it's 50-50 at your second tier, your level 2 of the overflow. You're 50-50 from the overflow from your rainy day to your operator account and your disbursement account. And you're going to continue that overflow until your operator account is fully flush, right? And you achieved your targets there. Which the target there is, how much do you need to be able to compensate your operators, right? Then once your operator account is full, now 100% of the overflow is going into the pocket in the profit in your pocket, into your disbursement account. And this disbursement account is going to go to the ownership, to the stakeholders, right? So anybody who's a stakeholder with ownership in the business is going to get this disbursement, right, from this disbursement account. So then you're going to set this targets of disbursement of, put in the perspective of I'm a completely passive owner of this business, this asset, because at this stage I'm exit 4, I'm running an asset, right? Again, we're going to do this earlier on, but you want to act as if from the beginning, right? With that mindset of, right? So that you're optimizing for what you want in the end, right? Which is to have a sellable asset for the highest valuations, best terms on investment, largest exit multiple. A way to accomplish that is to make sure somebody else is being paid nicely to be able to do that, and that there's still money left over for the ownership to get a nice return on the asset, return on the investment. So think of this as an investor, again, investpreneurship, right? So think of this as you're an investor. You want to set a target for what your return on ownership needs to be in this business. Once you achieved your return, your target return on ownership, that's when anything over 100% of this can start to go into a discretionary account. And that discretionary account is quite literally like your surplus money that can be used for the fun stuff, right? Like that's where we're treating our team to special bonus stuff. Maybe we're paying our team out a bonus, right? Maybe it's an extra performance bonus incentive of let's make sure we hit all of our targets so that we get here and then everyone shares in the upside at this point. But if we're running our business like that, then we're flowing the money through with our priorities in place, right? We're paying the right people at the right time, ultimately. And we're setting targets and we're working towards those targets. Because we're setting the targets and we're working towards those targets, we can now run retrospectives. And we want to run monthly, at least monthly, maybe weekly, depending on your business. But you want to run at least a monthly retrospective to update your goals, right? And then on a quarterly basis, you want to compare goals to your financial performance so you can update things. And what you're doing is you're benchmarking the progress made against the time to the goal, right? Because again, when we're setting these goals, we're creating smart goals. So they're time bound, they're specific, measurable, right? Attainable, realistic, time bound, right? And we want to make sure that we're achieving things within the milestone markers that we set out. And we want to make sure that on a measure what matters basis, we're hitting our targets tied to the measure what matters targets, right? And if we're not, for any reason on any of these things, in this retrospective, we're reassessing. Why? Because we're always optimizing. And what we're trying to do is if we're not hitting our targets within the time-bound targets, then we're going to reassess and we're going to say, why? And step number 6 is to ask yourself why, to identify, where we can improve, because you're always optimizing. And you're either hitting your targets, you're either not hitting your targets, and you're fixing that because you need to change. If you're not hitting targets, then you need to optimize. You need to update your budgets appropriately because you can't spend money that you don't have, right? So you're going to need to reduce costs, and that's why we do revenue minus profit allocations equals your operating expenditures. So run your retrospectives perspective, step number 5. You're identifying whether or not you need to update your budgets appropriately, your financial projections, right? And then you're taking action on that, step number 6. And you're either investing into efficiencies, you're either reducing costs, right? You're identifying new ways to grow your revenue. You're simplifying your budget out. Because again, you want to always optimize or ground your gross margin, right? If you follow these steps, you will always stay in business. Like, I can't say for sure, but as long as what you're selling is relevant, right? As long as there's a market for it, and as long as you're operating within this type of approach, this is a high probability of sustainability of staying in business. And again, that's the goal here, right? The job to be done was to stay in business for as long as possible so you could win the game, never have to start over, right? By optimizing, you're going to be able to put yourself in that position, which means that you'll have profits to plan for. And because you're staying in business and you're flowing through and you're letting the money flow through, the gross profits floating through your business system, and you're filling up all these accounts because you're managing your targets appropriately, you're running successful retrospectives by measuring what matters, you're optimizing by paying attention to processes, from your profit engine or your process engine that aren't supporting your goals. You're identifying maybe it's the wrong person in the wrong role. Maybe you're saying it's the wrong targets because you update your budgets appropriately to make sure you're always maintaining within this flow. There's going to be profits. You're going to disperse those profits, and maybe you'll even have discretionary, which leaves you to step number 7, which is planning for your profits. And the goal of planning for your profits is to be able to plan to share your profits, right? You're either allocating the distribution accounts to profit in your pocket, right? Pay yourself first, right? Make sure you're paying yourself first. Again, the goal of ownership, right? The reason why we take liabilities in our life is to make sure that there's a return for that. So make sure the appropriate return there is for yourself and ownership. But then share it, right? Share it with your team. Maybe set up a profit share plan. Hit your giving contributions if charitable giving is important to you, if there's a cause that you support, or something in your community, right? This is the money. This is the why, right? We run our business and we do a great job and we keep the accountabilities and we care enough about process to follow it because at the end of the day, if we do it, we'll have profit to share. And we can actually achieve things in life outside of just our business. We can do something with the money that we create, right? This is how we ultimately do it. And at the end of the day, it's your money and it's your responsibility, to be able to allocate it the way that you want. These are 7 steps that anybody realistically can follow. And again, this is exit agnostic. This is stage agnostic. You should be doing this right at the very beginning. You should be doing this if you're in your day job still. If you're still at exit 0, you're in your day job and you haven't even started your business as your full-time, right? Making your business your full-time job, which is exit number 1 of the 5 exits. If you're exit number 2, where you're building a team, you definitely better be doing this, right? This is like day 0 type stuff. Everybody should be doing this every time, consistently. Trust the process, commit to the journey. If you want to get access to this, you can get access to this deck, and you can also get access to this playbook that we put together that will actually walk you through step by step how to do this for your business. Use the promo code Bootstrapper and check out shop.bootstrappercapital.com, and you can get access to all of those digital templates, and then also a 14-day trial to the community where we can build better together, and then hopefully maybe get connected with our advisory services over at Simple Profits. Everything starts with a plan. Maybe get a little bit of extra help implementing this. And at some point, hopefully you get, tapped into our performance-based capital over at Bootstrapper Capital, where we are creating the most affordable and flexible performance-based capital of choice for specifically profit-led business owners until you no longer need one, right? We want to be your capital partner of choice. Hopefully you enjoyed this. If you did, like and subscribe. We appreciate you for watching to the end here. Trust the process, commit to the journey. Till next time.